All right, this is a question that I get asked a lot. Is it better to invest in shares or to trade Forex? And in today's video, I'm going to be answering this question. And if you're a Forex trader, prepare to be offended. To do that, I'm going to share my screen with you guys so you can see what I am doing. So let's go.
So before I tell you why I think investing is better than trading Forex, I'm first going to show you that people are losing money when trading Forex brokers. And how am I going to get this information? Very simple. I'm just going to tell you what brokers are saying. So let's look at FXCM and what they say. They say 66% of retail investor accounts lose money when trading CFDs with this provider. So this is the risk warning that they give. Retail investor just means non-professional. So that's what FXCM said. Let's look at IG. IG says 71% of retail investor accounts lose money when trading CFDs with this provider. That is insane. Let's look at what Trading 212 say. They say 77% of retail investor accounts lose money when trading CFDs with this provider. The numbers are getting higher. FX Pro, trade Forex like a pro. Let's see what they say. 84.67% of retail investor accounts lose money when trading CFDs with this provider. So 84% of non-professionals lose money when trading with FX Pro. That is actually quite insane. That means if you open an account with them, you're probably most likely going to end up in this 84% unless you are very smart, which most of us simply are not. So people are losing money. So the next time a friend tells you that Forex traders are making money like crazy, just show them these stats, show them what the brokers say, then they will just probably leave and leave you alone with them telling you, hey, you should start trading Forex. So let me get right into it. Why do I think investing is better than Forex trading? I'm going to look at 3 points. One, what is Forex trading? 2, how is Forex traded by non-professionals? And 3, what makes investing better? So let's move on to the first point. What is Forex trading? It's very simple. When you trade Forex, all you're trying to do is predict the direction, so the price direction of currencies against each other. So in this example, I've got the dollar versus the rand. The Forex trader would be attempting to predict the direction of the dollar against the rand, hoping that the dollar goes up in value. If the dollar goes up in value, and they've obviously bought a contract that states that the dollar is going to go up in value, they would then make money. But isn't investing the same? Well, sort of, kind of, in some type of way. When you are investing, so when you buy a share, you too are also trying to predict the price of the assets in the future. So you're trying to predict what is the price going to be in 1 day, in 1 week, in 1 year, in 20 years. So let's say you were to buy Pick and Pay shares today. What you'd be hoping to see is that the price is going to go up, or is going to be up at some point in the future. That way you can sell it for a profit and make money. But as much as the Forex trader and the investor are kind of doing the same thing in principle, they're in fact doing completely different things. And that's because of how Forex is traded as compared to how investing is done. So let's look at how Forex is traded. Very simple. Forex traders use something called a CFD broker. We've already seen websites of these. So you saw here CFDs with this provider, CFDs with this provider, et cetera, et cetera. So they use something called CFDs. A CFD basically is a contract that tracks the value of a particular underlying asset. In this case, it would be the currency pair. So if I just quickly go to Trading 212, I've got a currency pair here. It's the US dollar versus the South African rand. And obviously, these two currencies are being compared. 1 US dollar equals a particular amount of rands. In this case, 1 US dollar equals 15 rands 39 cents. And so if I make the prediction that the dollar is going to go up against the rand, what I would do is I would buy this currency pair. And just like that, my trade is done. And if I'm correct, you'll see over time, this number will be green, right? So obviously in this case, it's a random decision. So I haven't done any analysis. So I don't know how this is actually gonna play out. So the Forex trader, this is what they're trying to do. They're trying to predict what the direction of this particular currency pair is gonna be. And they do the exact same thing when they trade what we call indices. So something like the US Tech 100, which is the NASDAQ 100, they're trying to predict how it's gonna perform. Is it gonna go up or is it gonna go down. And if they think it's going to go up, they would buy. And if they think it would go down, then they would obviously sell. And so that's how Forex trading is done, or CFD trading is done. The one problem with it is, of course, margin, meaning you have to actually borrow money from the broker to actually transact. And that's where the big problem is. A lot of people lose money because they've over leveraged. So for example, they have to put, let's say, 5 Rand down in order to enter 100 Rand trade, meaning 95 Rands or 95% of the money that they've entered the trade with is in fact borrowed. Hey, we can see there our USD versus South African Rand trade is actually starting to make money. We got a 16 cents there, which is quite interesting. And so people will lose money because of leverage, simply because they can't handle risk. And of course, they don't really understand the complex nature of these financial instruments. So you'll see here, brokers tell you CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. And so people will lose money because of leverage. They'll think, hey, I just put in 1,000 Rand in my trading account, and all of a sudden I can see that I can use 10,000 Rands instead. And boom, they make a trade, couple of percent points down, and they've lost their money. Why? Because, well, you're just trading a contract between you and the broker. You don't own anything. And that is the core difference between investing and trading, which I will get to in a moment. The other mistake that Forex traders make is this. They use technical analysis without any economic context. So they'll use these very nice squiggly lines, right, to sort of determine their analysis. So they'll look at chart patterns and say, hey, if the moving averages cross, then it means the price is going to go up. Or if the stochastic cross, the two stochastic lines cross, it means the price is going to go up. That's great and all. Technical analysis does work. However, without economic context, without understanding what's actually going on in the economy, it's going to be not that effective. You can picture it like this. Say you're a professional and you work in a professional fund, and the senior manager ask you, hey, what are you investing in this week, or what are you trading? And you say, I'm going to buy the USD ZAR currency pair, or I'm going to buy shares in Pick and Pay, or I'm going to buy shares in MTN. And then he asks you, why are you doing that? And you say it's because, well, you see these two lines on the chart crossed. If that's your answer, what's probably going to happen by Friday, you're going to lose your job. All right. You can't base your trading on something that everybody else can see. It's yes, you can try play the market that way, but there's a part of it where you have to be doing things that other people can't see. Something special. We call that your edge. And so people will lose money because they'll base their trades on what everybody else can clearly see and do. And if it was that easy as just looking at lines on the charts, then obviously all of us would be making money from trading if it was that easy. Unfortunately, it isn't. And so the other mistake that people get fooled into is high expectations because of BS from social media. There's a lot of BS on social media about trading and investing. And so people get sucked in by that. And then they end up opening up these really high risk accounts with CFD brokers, putting in their money, hoping that they're just going to see some moving averages cross. So they're just going to see some lines on the chart cross, and then that's going to help them actually make good trading decisions. And what happens? Boom, the account blows up. So why is investing in shares or just investing in general better than Forex trading? Very simple. You keep what you buy. So if I go to EasyEquities and I buy Intimbi Industrial Holdings Limited, so I buy shares of that company. So let's say I buy shares at a price of 1 Rand each. I own those shares. Even if the share price comes down, it doesn't change that I still own 10 shares. I'll still get this very nice email that says, hey, dear shareholder, Intimbi Industrial Holdings Limited, they're telling me about their financial reports, or their integrated annual report. Because I'm a shareholder, I have a right to know what's going on in the company because I actually own something. I own a piece of the company. And that's the thing that makes investing better. Besides having no leverage, besides not needing to borrow money to actually enter the transaction, you own what you have bought. And that is fundamental to building wealth and developing your finances as a person. If you want to gamble, that's fine. I'm not saying Forex trading is gambling, though. If you're not buying something and owning it and just attempting to predict the price direction, you are in essence, in some type of way, attempting to gamble. Worse, if you think your analysis is only going to come from just looking at lines on a chart. All right. So that's what I wanted to say today about Forex trading. If you're a Forex trader and you want to debate, you want to argue, I'm just going to ask a very simple question. Show me your accounts, show me your trading history, show me how much money have you made and how much money have you lost. And you and I can have a good laugh about your losses, because odds are at some point you have joined this 84%. You've blown up your account and you've lost money. So for people wanting to make money online, I caution you against Forex trading. Yes, it is possible to make money as a Forex trader, but odds are, if you don't know what you're doing, you don't understand how complex CFDs are as financial instruments, you're going to join the losers most likely than join the winners. That's all I had for today. If you like this video, then follow on Instagram and subscribe on YouTube. Until then, thank you and goodbye.